most times by the time a retail investor is excited about some trend, it's already really played out. We are the providers of risk capital. So we need to be in this business. You have to always think like an optimist that what it can be.
So now when it comes to investing in these funds, what are some regulatory limits that people should know? Regulatory limits, rules, taxation, so that investors can get a full picture before they start.
So as I said, I think the regulatory minimum to invest in these funds
1 crore
is 1 crore.
AIF.
Typically, most funds will have the minimum defined slightly above that because you don't want to be too close to the regulatory limit.
Yes.
So that's number one. The second is it's an illiquid investment, which means that if you invest in a fund, you can't get out of it for a long time, which is typically 8 to 10 years. The third is, which I was explaining, that in this, the money doesn't go in one go.
Right, tranches.
It's typically a capital call system that as the fund makes a deal, they will call for capital from the investors. So if you are committing 1 crore, it's not going on day one. It'll go over time. In fact, sometimes it might take 4 years to get that full of 1 crore. So that's like another thing to keep in mind. From a tax standpoint, it's actually pretty straightforward. So this is a pass-through tax vehicle. Like the fund is taxed either long-term capital gains or short-term capital gains. But typically in a private fund, given these are long-term positions, it's mostly long-term capital gains, which is pretty tax efficient for investors to invest in. Other things to keep in mind, there are fees in this. Typically, the fees are 2 and 20 is what they call in the industry. 2% is the management fee, which is charged every year to effectively spend on all the expenses, building a team, and all the things that are required. And 20% is the carry. And the carry is charged, which is effectively saying profit sharing from whatever profit this makes. And in a typical fund, there'll be a hurdle rate.
Right.
Only above that, you start to do the profit sharing. But if the fund underperforms and is below the hurdle rate, then there's no performance fee.
So now, what are some mistakes that people usually make when it comes to venture capital that you might have observed? Also, what are some misconceptions that people have about this kind of investing?
So let's first start with the mistakes and we'll come to the misconceptions later.
Yes.
I think the mistakes, people don't understand the long-term nature of it.
Oh.
So most of the people still think कि अच्छा चलो अभी पैसे डालते हैं and एक साल में double हो जाएगा. That's not how it works. So that's the first thing. Understanding the long-term nature of it is very, very important. The second is understanding the illiquid nature of it. That even if you want to sell, you can't sell. So that's second. The third is, I think, people get very carried away by recent trends.
Okay.
So they are like, okay, this is hot today, so let's invest in this. I think, like, if you ask a seasoned venture capital investor, most times by the time a retail investor is excited about some trend, it's already really played out.
Right.
So you have to really think about the future, not think about the past. And the fourth is, I think people, even though they know this fund is 8-year, 10-year, but they start to judge the fund manager in the first 2 years. And as I said, I think in the first 2 years, you're just making investment. And there is no NAV that gets published every day because private companies' valuations don't move every day. So you should be, at least in your head, be okay to say that, okay, I'm going to only evaluate the fund like once it's at least in the 4th, 5th year. Only then you really start to see what's happening in the fund. So these are, I would say, some sort of mistakes people make around this. In terms of misconceptions, I think the first is, I think they feel that venture capitalists have like really easy life.
Oh.
I would say this is one job that means you're on all the time. You don't have any weekends because if there is a founder in town over the weekend, you will meet the founder.
Oh.
You will basically do meetings. If a portfolio founder is, in need, you will take the call. So it's a job which is on all the time.
Okay.
It's a job that requires a lot of deep thinking about the possibilities in the future. And thirdly, I think it's something interesting in the Indian context that you keep thinking about what does India really need? And how do we ensure that like we are the providers of risk capital while we make returns for our investor, but we also help, overall India achieve its goals, right? Like today,
Yes.
deep tech is a topic that everybody is discussing because everybody is realizing the importance of, let's say, semiconductor industry or AI industry for the country. And we are the providers of risk capital. So we need to be rolling up our sleeves and backing founders who have that audacious vision.
Right.
So, yeah.
Okay, so in a way, you're more involved as an investor over here
Absolutely. As a private investor, you're pretty involved with the company.
Right.
And many times you will either be as a board observer or board member on the company's board. But
Okay.
also the founder is looking up to you at times. See, a lot of times founders know the answer and they are great executors and they keep executing. And we are ultimately believing in them and their execution. But there are times when they are at strategic crossroads and they need that input. And
Okay.
that's where I think an investor's judgment, an investor gets to see so many different companies getting built. So they are able to help the founders as well.
So in a way, it is quite exciting.
It is quite exciting.
Right. And you also said that investors need to be deep thinkers in this space. So what exactly do you mean by that? Should they do their own research or what exactly do you mean by that?
What I mean by that is like they need to think what is a business model that
Okay.
will actually work. Because you don't have enough data when you are backing a company to say that whether it's actually going to work or not. So they need to think from very first principles, right? I think people who bet on quick commerce, I was one of the early sort of believers in the segment. They saw something which most people could not see. And that's what I mean by deep thinking, right? You need to imagine a world where this idea is already working. Versus
Okay.
when you are underwriting the investment or when you're giving the money to the founder, it still is not proven yet. And that's the beauty, right? If you look at like the classic example, SpaceX IPO happened.
Yes.
And Mirae was a large investor and we're proud shareholders of SpaceX. But so many, like it took 18 years and number of times the company was at the verge of bankruptcy. And now it created like almost a $1.75 trillion outcome.
Yep.
So that requires a lot of conviction. That requires thinking about what it can be. And I think Andreessen Horowitz, one of the venture capitalists, Mark Andreessen from Andreessen Horowitz, A16Z, always say this, that, in this business, you have to always think like an optimist that what it can be. Because in the worst case scenario, you can lose 1x of your money. But in the best case scenario, you can still make 100x of your money.
Right.
And that's really true for early stage investing. It's less true for maybe growth stage, but it really is true for almost every venture investor.
Okay. So now, for someone who's hearing this for the first time, they have the net worth and they're interested into dipping their toes into venture capital investing. What are some final pieces of advice that you have for them, just to sum it up, like maybe top 3 or so on?
First is go with a good brand name. I think access is very important. So
Right.
rather than backing somebody who doesn't have access, just invest in funds that have good brand name, that already have good teams working. Second is feel that does the manager, the person who is going to drive these investments, does he or she have understanding of India and has the hustle? Because this job is a lot of hustle. This is not a desk job that you're like just sitting at your desk.
Right.
You're out there, you're really hustling hard. So
Right.
understand that, do they have the hustle? And third is like really invest in it and then don't think about it. I think this is like one of those true, like a lot of people say, like if you listen to maybe our CIO, Nilesh, or Ramdev Agarwal, they'll say that, hey, the best returns they made when they invested in something and forgot about it. And, and like 20 years later, you looked at it and you're like, wow, this becomes so huge. I think this is one of those investment classes where you should invest in a fund and then at least not think about it for a while.
Okay, so this like, as you said, this is like a completely different ball game from just mutual funds or
Absolutely.
listed equity, and you feel like a bit of a visionary over here also, because you're investing in companies that have future potential and trying to assess which companies have those potentials. So that's quite fascinating. Thank you so much for being here today, Mr. Puneet. It was like very insightful, and you explained everything in a very simple manner. So thank you so much.
No, absolutely. Thank you. And I'm excited and hope more people get aware about this asset class. And at least it's fun to learn about new things. More than
Definitely.
even if they invest or not. I think they should be aware of what's happening.
Yes, definitely.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.